Good evening, everyone. My name is Kanika Sharma. I'm pleased to welcome you all to today's webinar on virtual world, where the speaker will be speaking about virtual world, cryptocurrency, e-commerce, and online games. The speaker for today's session is Mr. Abhishek Rastogi, who is a partner at Khaitan and Company. He's a distinguished voice in the field of taxation. As a tax and constitutional expert, he has argued about 300 writ petitions across in different courts across the country. Towards his professional recognitions, Mr. Abhishek Rastogi has to his credit various prestigious awards, including the Economic Times 40 Under 40. He has authored a dozen of indirect taxation commentaries. The foreword for few was written by the late Honorable Finance Minister, Mr. Arun Jaitley. I would like to invite Mr. Abhishek Rastogi to begin the session.
Good evening, friends. I hope you are keeping safe and everybody in family and friends are safe. We know for a fact that we have seen very different businesses, very different transactions. The last 2 years have been unprecedented times when it comes to medical services, health-related and safety issues, or if it relates to technology and the enhancement of technology, the way new products are coming. And hence we thought that, with the Taxmann team, we would try to cover up some topic which would deal with these recent things which are happening all around us, whether these are cryptocurrencies, whether these are e-commerce transactions, whether these are online gamings. And for a reason, these things have become very common now. For instance, if you ask about the online games, people are not stepping out. People are spending a lot of time on these online games. Today, we have not only the mental ability online games, but also those games which require physical activities to be done online. So I think the world is changing. The virtual world will become very, very common in the days to come. And I think in the days ahead and years ahead, we will be adapting ourselves to the new way of doing businesses. So we thought that we will take a pause and possibly talk about some of these aspects, about the e-commerce aspects, the online gaming, and the much talked about cryptocurrency, including the NFTs. And when I was finalizing this agenda with the Taxmann team, I thought that, I will talk less about taxes and more about how these businesses are getting developed. What are the changes which are happening? What are the regulatory aspects and so on and so forth? Because the most important aspect for any tax consultant or an advocate is to assess the transaction, is to understand the facts, is to understand the business. And my endeavor today with my team will be to talk more about how these businesses are conducted, what are the different nuances with respect to these transactions. So if we talk about the tax disputes, and we have seen it in last 30, 40 years, whenever there is a technology change which happens, there are related tax challenges which come. So in a way, the tax legislation will have to constantly adapt itself with the changing environment. We are living in a dynamic environment today, dynamic business environment. Things are changing every day. People are actually virtually working from anywhere and everywhere. If we see most of the courts are virtual as well. So what is important for us to understand with respect to even the tax controversies is to understand the rationale behind the changes which are being suggested. Why these changes are happening? How are business changing? What are the new models which are emerging? Are there different aspects which need to be understood by the consumer, by the regulators, and by us, the taxpayers? Every penny which is spent by us is important, and hence we must know our right, whether the amount of tax which we are paying is right or wrong. So I think let me go straight to one of the most important aspects of virtual world, which I personally am very passionate about, and this is online gaming. So what happens in an online game? Let's say there are 4 friends who are virtually situated in different 4 cities. They want to play a virtual Ludo game, because of COVID restrictions, you can't come, and so on and so forth. You want to be safe. You log on to a common portal. All of these friends, through the common wallet, Paytm, and so on and so forth, transfer 100 rupees, and that 100 rupees go to the common kitty, let's say, of the online gaming platform. Now, when this 100 rupee goes in, everybody contributes 100 rupees each, and the player who wins, so one of the four will win, he takes 380 rupees. Now, what happens is, it works like a wallet. 380 rupees go to your wallet. You could redeem that amount in your wallet, which means that it can come back again to your Paytm or to your bank account, or you could leave that amount there. So let's understand first the transaction. All of these four players contribute 100 rupees. 400 comes to the common wallet. The player who wins gets 380 rupees. Now, as far as the online gaming platform is concerned, the revenue for the online gaming platform is only 20 rupees, not 400. And hence the question which arises is whether GST must be made applicable on 400 rupees or 20 rupees. That's the big controversy. And I was very fortunate to argue one of such writ petitions in Punjab and Haryana High Court, wherein the High Court very categorically decided that this is an ambiguous issue. There is already a committee which has been formed to decide on the taxability and valuation of this issue, and hence there must not be any coercive measures which must be taken against these online gaming platforms. So, interestingly, as we speak, there is no answer. The committee has not come up with the proper or the final response that how much should be the tax and what should be the value of the tax. So that's the broad controversy with respect, or the broad illustration, the simplest illustration with respect to the gaming sector. Now let's go to the casino business, because the casino business is completely physical as compared to these online gamings. You go into a casino, you pay 5,000 rupees cover charges. That 5,000 rupees is subject to tax. You pay under the erstwhile regime, you would pay service tax, and under the current regime, you pay GST. You pay 28% or 18% as the case may be. You enter the casino. Now, when you enter the casino, out of that 500 rupee cover charge, you may get 1,000 rupees tokens, which you could use to play. And you may go inside and may buy 10,000 rupees worth of token, which you would physically use to gamble and play. And that can happen only in 2 states in India, because you are not supposed to actually gamble in those states which are not authorized for these gambling transactions. And we'll come to that. So the related point now is, so for instance, I put a bet, and I put a bet of 1,000 rupees. I may win, I may lose. Now, my initial tokens of 10,000 rupees plus 1,000 rupees, which I got at the cover charge level, I use that money. And suppose if I lose everything, that becomes the revenue of the casino. If I win, then what happens? Will there be a set off with respect to the win? Because that's the loss of the casino. And today, unfortunately, we have no answers. The valuation aspect with respect to casinos has become the biggest challenge in the country. On what value would impose tax? Would you now impose tax on each and every bet which I play on the roulette table? Or if I want to play blackjack, would you put the tax on each of the bet which I put? Because if you compare the physical games which a person is playing as compared to the virtual game which is being happening in online Ludo, every transaction gets taxed. Every 20 rupees in our earlier example gets taxed. But what happens in a casino business? No one has the answer. So that's the challenge. The way the things are changing, the way different aspects are coming up, and a comparison being made between the virtual world and the physical world will certainly pose different challenges, not only for the tax authorities, but also for the regulators and the ultimate consumer. Now, let's also understand that when we entered the casino, there was a charge of 5,000 rupees, which has been subject to tax. Similarly, with respect to the online gaming, there could be some convenience charges. So, for instance, In the earlier example of the online Ludo game, which happened, the person who won 380 rupees decides that out of that 380 rupees, he wants to transfer 280 rupees to his bank account now because he has a lot of money, and next game he can play with the available amount which he has. So the online platform may charge some convenience fee for transferring this amount back to the bank account. That I think most of these online people are paying tax that has not been subject to tax. So as far as each and every transaction of a fee-based nature is concerned, tax is being paid. But when it comes to the fund-based activity, the problem remains or the challenge remains. Also, I think the related point which we must understand, and we have seen a lot of these controversies in these online games, is whether this is a game of skill or a game of chance. And why is that important? And let's take two examples, because these two public interest litigations have been addressed by Bombay High Court and Punjab and Haryana High Court. In one of the cases, I would not take the name, but the virtual team is to be formed. And the question is, so for example, if you make your team of 11 people who would play cricket, you select the players. Now, the selection happens not merely by chance, it happens by skill. You need to know the best averages of that player in last season, over the period of time, and so on and so forth. And you would build up your team. When you build up your team, and similarly other players also build up their team, the teams play with each other, and this is all permutation and combinations and different simulations that the team play. And hence the question which arises is whether this is a game of skill or a game of chance. Can a person who would have no skill about the game could still make those teams and win? And hence, a couple of these courts held that this is a game of skill, not a game of chance. And why is that relevant? If these are games of skill, then which means that these are not lottery and gambling. These are games of skills and not games of chance. And why is that relevant? Is because if we today see the state regulations, only few states in India, for instance, Goa allows you the gambling. And there is a state-specific act which provides that you could gamble in that state. And hence, if this becomes a game of chance, then the regulatory aspects would also come into play. So I think those are important aspects which must be seen. Another very important aspect is with respect to the actionable claim. Now, we know for a fact that GST is not applicable with respect to actionable claims. And what are these actionable claims? These actionable claims are unsecured debt for which a claim in court could be made. And these actionable claims are also relevant for various different sectors, such as your airline miles, hotel miles, and so on and so forth. Now, what happens is that if any of this falls within the category of the actionable claim, because it remains my unsecured debt which I need to recover. So if, for instance, if that company becomes bankrupt, will I be able to have a claim in the court to recover that amount which is there in my wallet? Remains an important fact which will come up before the courts at some stage. So I think it's very important for these different sectors to be analyzed with respect to these actionable claims as well. We hope, as far as the online gaming industry is concerned, the formation of the GOM will do a pragmatic job. We have full hope with the parliamentarians and the regulators so that this industry at this stage, at the nascent stage, is given full backup and support, and we do not miss on the online action and remain safe at home. So I think that's with respect to the online games. Now, if I move on to the next point, I would want to cover e-commerce before I go to cryptocurrencies. E-commerce, again, we know for a fact that there are a lot of these e-commerce models which are prevalent. And for us to understand these e-commerce models, it is important to analyze the different set of permutations and combinations with respect to these activities which happen. So let me list few of these e-commerce models. So there could be a direct sales model. So for instance, Taxmann publishes its book and has a direct sale online portal where you could go and buy Taxmann books online. It's a direct sales model. There could be an inventory model. So for instance, there could be an inventory model wherein the company owning this wireless mouse wants to sell this through the online platform. And there could be two different companies. One would sell it online, and the other company would only get into the business of buy and sale. So the trading happens in one company, and the online portal is owned by the other company. So this is an inventory based model where there is an inventory which is there. Then the most popular one is the marketplace model. Now, what happens in a marketplace model is that these online companies only earn the commission. So which means they neither buy nor they sell. What they do is they just match the buying and the selling. So if I want to buy this phone, I go to a particular site, I go to that site and I see the best deal. And they keep on flashing these different deals. They would tell me that which vendor, which supplier could provide this and who's offering the best discount. And I select that, and the transaction is matched, and they earn only the commission. There is nothing which they have, which they possess in stock. So this is a pure marketplace model. Lately, what is happening, if you see the major e-commerce operators, they are operating on a warehousing model. So for example, Amazon started at some point of time as a marketplace model, but now today they have their fulfillment centers. They have their own warehouses, and these are fully automated warehouses where they would store the products as well. There could be the marketplace model also, but they would have their own warehouses also for the fulfillment center. So this falls within the category of the warehousing facility available or a fulfillment center available for a marketplace model. Then we could have C2C models. For example, I want to sell my old furniture, OLX. And why are these C2C? Because the customers and customers get together and they approach the customers directly. So these are C2C platforms. So OLX is a great example of a C2C platform. Then we may have aggregators, like for instance, Make My Trip. They buy or underwrite these airline tickets, etc., etc. You go there and buy the tickets. They would have that stock, and these are basically the aggregators. Then interestingly, we have B2B2C model, very interesting model. What happens in this is, and the examples could be Coupon Dunia, Swiggy. So what they do is they have a tie-up. A business entity will have a tie-up with another business entity, and the final recipient is the customer. So B2B2C model. So for instance, Swiggy in itself will not ever get into the business of cooking food or food delivery. They are into pure food delivery, but they would have a tie-up with some other business food restaurant, and the delivery happens, the discount comes, the transaction flows. And these are today very important models which are operating because these are B2B2C. So there are transactions which are tri-party transactions, the transactions between the business and the transaction between business and consumer. Now, interestingly, under the GST regime, for the first time, we have the definition of who the service provider is and who the service recipient is. And that's when the controversy with respect to who the actual service provider or the receiver is addressed to a very large extent. And hence, this model has become very common for usage. And we'll come to some of these aspects with respect to these models as well. Then we have some other models like digital content. So for instance, ebooks, which you would want my commentary, you go to the Taxmann site, there is a proper option to go to the link. You click on that link, you can buy my commentary. You get some free time, 15 minutes to read that commentary online. But if you want to be a regular reader, you get this digital content. You go to Taxmann and buy that. So that is digital content. Now, video on demand. So for instance, Netflix is video on demand, where you are getting those services or that some programs, etc., on videos, or some movies, etc., on videos. Those are another models with respect to these e-commerce transactions. And today, I think more than the taxability or some different aspects with reference to these e-commerce operators, I think today there are two issues which come up for this sector. One is with respect to discount funding. And what happens in this discount funding? It is basically burning cash. We see sometimes that during Diwali or festival season, we see a lot of these discounts. Pen drive you get for 1 rupee. Now, what happens in that? There are no free lunches. A pen drive would never cost you 1 rupee. But still, if you go onto that site, you could buy that pen drive for a rupee. And now, what happens? Why is this cash getting burned on that night or on that day? The reason is, when you go onto that site, the pen drive, which is available otherwise, let's say for 100 rupees, you get it for 1 rupee. But what happens in that is that 99 rupee or 90 rupee or whatever the case may be, some part of that funding is the burden is either picked up by the e-commerce operator, or the burden is picked up by someone else who's getting advertised there. So for instance, if we go and buy a pen drive on Amazon, we would be buying that pen drive, but on the left hand side, there'll be a Taxmann logo which will be flashing, and it will flash in such a way so that Taxmann promotion happens as a brand. Now, that is the brand promotion which happens. And also what happens is, a lot of people come onto that site. They may or may not buy that 1 rupee pen drive, but the traffic on the site increases, the number of hits increases. They may buy that, or they may buy something else apart from that as well. So the question which arises is that when this discount funding happens, what happens to that brunt of 99 rupees? Is there a barter? Is there a promotion? Would that become taxable? And those are the questions which are being posed. Or is there a barter of transaction? I pay you this, you promote me, and in return, I pay you this and I get this. So a lot of these issues with respect to barter are coming up. Similarly, we have seen a lot of these combo issues which are coming up. Fortunately, under the GST regime today, we have the clear definitions of what are mixed supplies or composite supplies. So during Diwali, you have a composite pack, and that may have products of different rates. So what could be the rate? And also, are these naturally bundled in the ordinary course of business? Those questions come up, and then these combo offers issues are also very, very relevant as far as e-commerce is concerned. Recently, we must have read about two major controversies with respect to taxing these e-commerce supplies, and those two are food delivery services. So these e-commerce operators for food delivery services. So for instance, if I am a regular user of Swiggy and Zomato, I order online food. I don't care whether the tax is being paid by Swiggy, Zomato, or by the food supplier or the restaurant. I don't care, because I get that brunt of tax, and that tax is fixed for me. There is no problem. The government changed the provision that with respect to these transactions booked through the e-commerce operator, the burden of paying tax is on the e-commerce operator. And that is fundamentally to enhance compliance, to ensure that there is no revenue leakage. Now, what has happened in this is, suppose I want to order tax from a dhaba. I want to order food from a dhaba. Dhabas, because of the threshold exemption, are exempt. Now, when I order food from same place, which is otherwise exempted due to the threshold turnover limit, and I order through the e-commerce operator, there is a tax applicability. So that needs to be addressed. Today, can we have an arbitrary mechanism to tax such transactions when only the mechanism to book a supply is through an e-commerce operator? And now let's understand another situation. I take Uber, I book the cab, the rent operator pays the tax or Uber pays the tax. As a consumer, I have no problem till the time the entire tax remains the same. The government has come up with the provision that in certain cases, the tax will have to be paid by the e-commerce operator. Consumer has no problem. But what happens in a situation when I don't want to take an air-conditioned car? I want to take an auto. I want to just go to a very short place, and auto is more convenient. If I get down off my building and take an auto, then there is no tax. But if I book the same auto through the Uber app, there is a tax. So the question is, can there be an arbitrary tax on the same supply when such supply is being routed through the e-commerce operator? Now imagine, now I'm going to the extreme situation now. Let's imagine food in terms of fruits and vegetables, right? Fruits and vegetables, we all know, are exempted from GST. Now, if these are exempted from GST, I go to the vendor, I pick it, there is no GST. Now, will there be a situation that when I book the same food, fruits, vegetables through an e-commerce operator, it becomes taxable? So if I use the Grofers app or Godrej, whatever these other apps are, if I book the same supply through the app, will it become taxable? So far, it is not. But I think if we see the direction in which the taxing provisions are moving, one fine day we could be certainly in a situation wherein even the fruits and vegetables booked online may see some tax on it. And I think that will be ridiculous. So I think we need to have more pragmatic approach. We must understand that what needs to be done with respect to the supply, because GST is a tax on supply. The tax on supply cannot be changed because of the nature or the mode through which you are booking or buying that supply. Imagine a situation that if I want to buy this iPhone and I pay cash, the tax rate is different. If I use credit card, the tax rate is different. If I book it, if I walk into the retail outlet, the tax is different. And if I book it through the operator using one of the e-commerce model, the tax is different. So I think that needs to be understood. This arbitrary needs to be addressed at the very inception, because that will completely change the fundamentals and dynamics of doing business in India. I think I would not go into further details of what these specific provisions with respect to e-commerce are. We as tax experts can go through these provisions, and I'll be more than happy to address any of these provisions separately. You could write onto my LinkedIn, or you could follow me on LinkedIn and YouTube, and you could have those answers. I, being also an author of more than a dozen of books of Taxmann, would want to address a lot of these issues. But today, because of paucity of time, I may not get into those technical aspects, because I went through my participant list and we have varied people from different backgrounds, from students and freshers to qualifieds and highly professional people. So I'll try to keep it more business oriented, more friendly oriented, and I'll try to answer some of these questions also towards the end. So that brings me to my next topic, and which is very, very interesting for me and for others, for my team who's worked quite a bit on it, because this is something new. This is changing every day. And this is cryptocurrencies. Now let's understand. Cryptocurrencies are certainly now defined under the proposed bill, and we'll come for a moment to that definition in some time. But these cryptocurrencies, whether these are banned or regulated and so on and so forth, but let's understand the technology behind this, on what technology this is working. And to me, the most interesting part is that blockchain technology on which it works. Blockchain technology is what? So for instance, before partition, there was a property, and I need to check the land record of that property. That land record today, if I need to go physically, I will have to go through that data room and so on and so forth. I will have to pay this and that and pay charges and so on and so forth. And then I get the complete list of ownership. Who was the owner, how the ownership changed, the lineal ascendant or descendant, inheritance versus sale, supplier, lease, rental, and so on and so forth. Now, what this blockchain technology is capable of doing? Digitally, you could have a document or a trail by which you could completely assess right from the word go at the very inception. Who was the owner? How the ownership got transferred? What happened later? Was there a lease? Was there inheritance, and so on and so forth? And at one click, the use of technology could give you the entire chain of events. This is in very simple way blockchain technology. Another example for blockchain could be insurance sector and the health related issues. I bought insurance 20 years back. At that point of time, I had no health issues. Whatever medical tests I'm getting done, all that is getting tracked to a common report. And over the period of these 20 years, when I was 20 and when I became 40, there is a complete health history. Through the blockchain technology, entire health data is getting captured. And when an insurance company comes to me to renew the insurance, or I buy a new policy, at the click of the button, by the use of technology, there is complete linkage to the transaction. Now, this is blockchain technology. And no one in the world is against the technology because this is fantastic, fabulous. Now, why is this technology being questioned? This technology is being questioned because now this technology is being used for certain things like cryptocurrencies and NFTs, non fungible tokens. And we'll come to non fungible tokens as well. But now, what is cryptocurrency? And I'll read this proposed definition. And it says cryptocurrency, by whatever name called, means any information or code or number or token. And these tokens would cover non fungible tokens, not being part of any official digital currency, which means that tomorrow, if Government of India comes up with the digital currency Lakshmi, that would not fall within this regulation or the ban. So it defines by saying that which is not being part of any official digital currency, generated through cryptographic means or otherwise. Now, or otherwise, I do not know what sense that would make, because that would make it too wide. And the initial question which we had raised with respect to the gift coupons, miles, and so on and so forth, is the intention to even cover that with the cryptocurrency? I think I'll be the first one to go to the court and challenge that. I don't see that's the intention. If that gets unintendedly covered here, we'll get it constitutionally tested. Providing a digital representation of value, which is exchanged with or without consideration, very wide, with or without consideration, with the promise or representation of having inherent value in any business activity which may involve risk of loss. So risk of loss could be there, or an expectation of profits, which will always be there, or profits or income, or function as a store of value or a unit of account, and includes the use in any financial transaction or investments, but not limited to investment schemes. So I think very wide definition. The cryptocurrencies have actually been defined to include more or less everything, including the non-fungible tokens. And before we go to non-fungible tokens, I think today we must understand that what are different types of these currencies which are there. So there could be public cryptocurrencies. So for example, Bitcoin, the public, because you and I can go and freely buy this. We can get in onto an exchange and buy that. So that's public. It could be private. So for instance, Taxmann and Khaitan can tomorrow come up with a private currency. You could use that currency only to buy our services or books. So that's private currency. Then there could be permissioned. So which you could get only through the permission or an access, or there could be consortium. Tomorrow, as knowledge partner, Khaitan and Taxmann could jointly come up with a consortium and a currency. So first thing is to understand these different types of currencies. Second most important aspect is to understand the participants in this business, because once we understand the participants, we'll be able to assess whether the transaction is with respect to the fee or the fund. And that's very relevant. So who are the participants? So the participants could be coin investors, So for example, Facebook for Libra is the coin investor, who's inventor. The coin inventor is the person who invents that coin. Then there could be miners. These miners work on arithmetic algorithm methods and procedures, and they mine. They solve these mathematical problems to mine more and more coins, and it's not an easy job. So these are all people with all mathematical abilities, and they work on algorithm based formulas to mine more coins. So these are miners who are mining these coins. Then there are nodes. These nodes are nothing but computing terminals to run such software. Then there will be exchanges, because exchanges will facilitate in buy or sell. So like a stock exchange, there are these exchanges for these cryptocurrencies. Then there are traders who would buy and sell. Then there are hash power rental companies, an important aspect, because the entire cryptocurrency requires lot of power, lot of energy, electricity, and so on and so forth. So there are these hash power rental companies which provide these infrastructure facilities. Then there could be utility companies that issue utility token, and these are nothing but like middle coin to use fiat currency. So for instance, if I have Bitcoin and I want to use that Bitcoin to buy 10 handphones or laptops, but the Amazon or the e-commerce portal doesn't accept the Bitcoin. So I go to those utility companies, and in a very, very lay example, that gets changed into the currency which is accepted by that site. And then these utility companies convert my cryptocurrency into the acceptable mode, and then that supply of a service or goods comes to me. So there are these utility companies. Then there are casual consumer like you and me who could buy these casually, just for fun or just to understand the business or just for short-term investment. There could be casual consumers. Then there are wallet providers, because you need to store them in a wallet. So there are these wallet providers who would provide you these wallet services for an annual charge, quarterly charge, and so on and so forth. Your cryptocurrencies are protected in the wallet, so you need to pay those wallet service providers as well. Then there are coin offerers. So for instance, there could be Wazir X, and which provides coins on registration. You could use those coins to perhaps pay the commission which is required to be paid while buying and selling of these cryptocurrencies. So today, if we see the definition of the cryptocurrencies and the regulations which may come with respect to these cryptocurrencies, most of these participants will have a problem of doing business in India if these provisions come in the way these are today proposed, because these are proposed to be completely banned: the buying and selling, the exchange, the trading, the investment, and so on and so forth. And we have seen that the definition of this cryptocurrency is quite wide. So we will come on to that towards the very end, that how a proper balance could be maintained, if at all. That takes me to my next topic with respect to the non-fungible tokens. And what are these NFTs? What are these non-fungible tokens? Very interesting. So for example, we have MF Hussein's painting. That painting is, let's say, in terms of value, is 1 crore. I would want to be an owner of that painting, but I certainly do not have that sort of money. Now, what happens in a non-fungible token? You become the owner of that painting and you get some right to it. So, for example, if MF Hussein's painting is, let's say, in a museum in Delhi, the ownership of the painting will be with someone else, but you get a sort of an ownership through the token, and that's non-fungible token. And what right you get? So for example, if I want to do my 40th birthday and I want to invite my 40 friends on my 40th birthday, and I want to take them to that gallery, and I want to tell that, I own this painting, and what right today I have, the non-fungible token could give me a right to access that painting for 4 hours. exclusively for me or for my friends, and I am an owner, and that right of 4 hours access may be available to me, let's say every quarter or every year, or probably the right could be let's say 10 hours, and I can use that right at any point of time in different at different times in different uh, time periods and frequency. So that's the right which I get. So these are non-fungible tokens. Another example could be that let's say I want to buy a house in Miami. Now that house in Miami is, let's say, $100,000. I would go to Miami only, let's say, 7 days in a year maximum. I would want to go there, or let's say for Goa, for instance. So I buy a non-fungible token. Through that non-fungible token, there could be two ways. The excess profit which gets generated from that property comes to me proportionately to the extent of the token which I have, or it may give me some excess. It may give me an excess to go to that property and stay there with my friends for 7 days, 4 days, and 5 days. So what has happened basically through these non-fungible tokens is that I have got some right, and that right could be right to access, right of ownership. And because that right is not only with me, that right is also there with others, they will also have some powers which those rights would have given to them. Now, let's say that for this Miami property, there were some 1,000 such tokens which were issued. So which means that there are 1,000 owners or joint owners with respect to that property, or who would get some access. But over the period of time, let's say the value of the property enhances. Now, if the value of the property enhances, the value of the token also enhances. So if I bought that token for $1,000, the value of that token after 5 years may be $10,000. We do not know, or could come down the way the prices of the property moves and up and down. And when I was finalizing this presentation, I thought of some other example, and when we did some more research, this is actually happening. I thought that, what about Taj Mahal? We have seen in movies like Bunty and Bubbly that Taj Mahal gets sold. That will actually happen. That can actually happen. You could one day get ownership right or access right with respect to even Taj Mahal, Qutub Minar, Red Fort, Buckingham Palace. You could own that. So for instance, the government of UP could come out with NFTs with respect to Taj Mahal. They can say that, let's say the value of Taj Mahal today is 1 lakh crore. And they determine that value. And they say that now we will sell this Taj Mahal. And on one day, every Sunday, the owners of these NFTs will get an exclusive right wherein they would enter through a specific gate, not the common gate. And at that point of time, only these owners of NFTs will be there. And the value of Taj Mahal after 10 years could be 10 times. So the value of NFT would also increase. So when we were checking with such things which are happening, there is quite a possibility of even selling such historic monuments. And this may be a reality. Which brings us to the fundamental points that whether it will be the right decision for our regulators, for our parliamentarians to completely ban such transactions, or will it be a better choice to regulate such transactions? We are not questioning the ability of the government, because the government has done fabulous job. In last 6-7 years, the government has come out with a lot of innovative ideas and thoughts. So regulating is very important. Banning may not be the solution for several other reasons also. Person may go out of the country to do those transactions, and extraterritorial aspect of the Indian constitution would come into play. So are you killing the industry only in domestic market? But I think Regulation is important because government also wants to ensure that the Indian consumer or the investor, especially the retail customer, doesn't get into the bloodbath situation. It must not happen that today we are investing in cryptocurrencies, seeing the trend which has happened, the way it has increased, and suddenly there is a fall because there is actually no intrinsic value, or we invest in some wrong currencies because every day there are new currencies which are coming up. So that aspect needs to be seen, and hence this bill which has come out has given a lot of food for thought. We must understand different nuances. We must today see and understand the way this market is happening, the different participants, whether, and now, for example, if we talk about the exchanges which deal with these cryptocurrencies, the question is, if the value of Bitcoin, let's say, is $100,000, and I bought it 6 months back, and today I sell it. The matching happens on the exchange. The buying and selling, the matching happens. And in that process of matching, there is a trading margin. And that trading margin is earned by the exchange. Now, will you tax only that trading margin? Or will you tax the entire Bitcoin? Would you say that these are goods or services? Because today, anything which is not goods is services. So would you say that it would either be goods or services? So at the time when you bought cryptocurrency, you should have paid GST. And when you are selling, you should pay GST. GST becomes applicable on the entire value. If that's the situation, the entire industry cannot operate because 18% or whatever value at the entire value is like a killer. It can't survive. Nobody can survive. But if you want to tax only the margin, but you say that cryptocurrencies are banned in India, then most of these exchanges will not operate from India. They would go to Cayman Islands, Seychelles, and various other places where they will have an exchange. And people will operate through that exchange, which is outside of India. Now, Article 245 of the Indian Constitution will come into play when you try to tax those exchanges which are situated outside of India. All of this is cryptic. All of this is virtual. Nobody is in India. So will you be able to tax those transactions? So banning versus regulation is the question which comes up. And that's very important. We must also see different set of transactions which are coming, like these smart contracts. These are self-executing contracts based on computer protocol with use of blockchain technology. These are automated lease rental contracts. So for example, and a friend of mine came 2 weeks back to my house and he was telling me that I want to have some sort of an app wherein I will match the history of the person who takes the house on rent. Now, the person who's giving that house on rent and the person who's getting that house on rent, they have fixed parameters. So the person who wants to give it on rent, I don't want to give it to bachelors. I want to give it only to this set of people. I don't want to give it to students, and so on and so forth. The person who's taking the place on rent says that I would want to have at least the period of 3 months as a termination clause. I need to have only a lease rental arrangement wherein only the deposit is 1 month rent, and so on and so forth. Now, if we see the way this smart contract would work, this smart contract will not only assess the requirements of the lessor and the lessee, but will also negotiate, will also take the decision. And that's what the technology can do. So it is not only the cryptocurrencies which must be debated. It must also be the underlying technology which makes this cryptocurrency very interesting. Now, if we see the distributed ledger technology, what is this distributed ledger technology? A lot of people are from accounting background. Historically, how the accounts are being prepared. There is centralized accounting which happens for different branches and head office and so on and so forth. And all of that is computed and consolidated. Now, imagine through the distributed ledger technology, the accounting happens on a real-time basis. I'm booking an expense here, I book an expense. At the same time, there could be some revenue, there could be some depreciation or whatever. Everything gets automated, everything gets captured, and everything is accounted on a regular real-time basis. That's the power of this technology. It uses distributed ledger technology, the way the Google Doc works. I open a doc here, Kanika can make some amendments to the initial part of it, but I don't want to see the initial part of it. I want to work only on particular aspects of it, and I make changes there. And on a real-time basis, the changes are happening. So as an author, if I want to update my book, but one of my researcher wants to just add some case law or the citation in the footnotes, that person can edit that on a real-time basis at the time when I am updating my book. So that's distributed ledger technology, which I have given a very simple example, but which could be used for cryptocurrencies, for NFTs, and all of these new ways of doing business or new things which are coming up. So we cannot ignore smart contracts. We cannot ignore blockchain technology. We cannot ignore this automation which happens, because these will be the new ways of doing business. Who had thought 2 years back that most of the courts would be virtually done from home? Today, I argue several courts sitting in my room, in my cabin. So I log on to different systems, 2 laptops for Supreme Court, different courts, 2 laptops for Allahabad, Gujarat, and so on and so forth. Who would have thought that that would happen? But that has actually happened. And that's the power of being virtual. A lot of meetings today are happening virtually. So we need to adapt to the new environment. We need to understand these online gamings, e-commerce transactions, cryptocurrencies, non-fungible tokens, the applicability of these underlying principles to these cryptocurrencies and NFTs, the concepts on which these are getting built. And at the same time, I think from the taxation perspective, the aspect of actionable claim will come into play for a lot of these transactions. If these are actionable claims, then the tax treatment will certainly be very, very different from the way these are understood to be taxed. So I think as far as the proposed bill of cryptocurrency is concerned, we know for a fact that the RBI circular had come. I had challenged that RBI circular in Delhi High Court, and of course thereafter there is a Supreme Court decision which came to basically provide that RBI cannot come out with some circular for the banks not to enter into these cryptocurrencies and so on and so forth. But today we have this bill which proposes a ban or a regulation. So I think there has to be a proper balance. And if I were to see that in a very, very simplistic way, I would give credit to our government because they have done a lot. The endeavor of the government is very clear that if there is a bloodbath, people must be aware. People must not, the retail investors must not face any loss with respect to these transactions. So they need to ensure that our consumers or the retail investors are getting protected. They need to ensure that the regulatory framework is in place, the tax framework is in place, so that no penny which is to be collected remains uncollected, the compliance happens. And they need to keep a fine balance between the global initiatives which are happening, because you cannot ignore the technology which is an underlying factor of all of these initiatives, the blockchain and these decentralized distributed ledger technology, which becomes the fundamental and based on which a lot of these transactions in the years ahead would happen. Yes, but at the same time, these new technologies and new ways of doing business would pose a lot of challenges like cyber attacks, money laundering, terror-based funding, and so on and so forth. So the government is doing its best today to protect us, to protect the entire framework, to be visible there at the global level, to ensure that India is moving in the right direction at the right pace, and we are taking all measures in a very, very pragmatic manner. On that note, I would want to complete today's session. We will be regularly talking on different aspects. We will be coming out with the next topic as well, and we will discuss that with Taxmann. And do wait for the next presentation, which will be there with the Taxmann team. I am happy to address some of these questions which may have come. Oh my God, there are a lot of questions, and I will try to address as far as possible all of these. So,
Mr. Rastogi, for
Srinivas,
convenience, I'll just read out the questions for you, if that's...
no, I think I can manage that. That should not be a problem at all. So I think Srinivas wrote quite some time back about the distributed ledger technology. I spoke about that, so I would not repeat on that. Grish said not to buy NFT or Bitcoin. Uh, I don't know whether that's a question or a comment. That's absolutely okay. I go to the next question. Meher is writing. My question is very small. Should I buy Bitcoin or NFTs? Sometimes the most simple questions have the most difficult answers. Today, these are not banned, so you may buy, but tomorrow these will be banned, and the regulation says that within 90 days of that ban you will have to sell. Now if that situation comes, who will buy what you buy today? So will you be able to sell that? So that's the answer. The answer is not very simple, but on a lighter side of it, if you want to buy, and I think you are a rich girl, you must go to somewhere outside of India, open the bank account there and buy it from there if you're really keen to buy Bitcoins and especially NFTs. So I would not suggest to get into these transactions on a very serious note till there is a regulatory clearance from the government, because that should be the last thing on the agenda. We must wait for the government to come up with the right set of rules, regulations, what can be bought, who can buy it, and so on and so forth. So thanks, Meher, for that question. Then I think Mr. Garg is writing, who can issue NFTs? Is there any cap on number of NFTs? There is no cap. Anybody can issue NFT. You need to have different participants who would help you to use that blockchain technology to issue. And of course, if that needs to be traded, it needs to be traded through the exchange. You would want to have those wallet service providers and so on and so forth. So I can issue NFT tomorrow, not a problem. Today, the only problem which I will have to see is that whether there are any regulatory requirements which are there, which I need to meet. So typically anybody can. And when we were reading out, a lot of these e-games have NFTs today. We know for a fact that there is this interesting international show which has also issued an NFT. The way we used to buy those cards for different players and football, soccer players or cricket players and so on and so forth, those cards are also issued by way of NFT. So virtually anything can be bought or sold through an NFT, and anyone and everybody could issue that NFT. Then there is question from Grish. Almighty already assigned unique fingerprint, thus as an additional layer of security with user, and combination of password with OTP will provide enhanced safety for. Absolutely, I agree with that uniqueness is there. We need to, and the government and the Indian government has done that. Today, I think Aadhaar is one such example where everything is based on biometric techniques, and that could be used, Grish, for sure, in the days ahead as well. Only legal tender of financial waiver or grant is the route to acquire CC. Yeah. So now we go to the next question. I think Grish has written a lot of questions. Thanks, Grish, for writing a lot of these questions. Options available for ebook. Yes. Ebook and hard copies, those options are there. Now I go to the question from Abhiram. Abhiram says, what is the GST implication for usage of promo fees, referral bonus against entry fee for games? See, entry fee for games at the level of the consumer. The consumer must not worry. What becomes taxable is that margin which pertains to the online gaming platform. Now, it is like this. I use my miles to buy an online ticket, airline ticket, or the hotel stay. Now, what happens is that will completely depend on the transaction, Abhiram. So, for instance, when you book SPG nights through Marriott Bonvoy app, the amount of points which you use is the complete consideration which you are paying for that night. But that supply still remains the room rental or the service provided by a hotel. So the hotel will have to discharge that. But because they are not recovering over and above that miles which I have used to book that hotel, I need not worry and pay. So that will completely depend on the contractual transaction. So Marriott Bonvoy night is different from SPG night, from the airline Vistara flight. Why? Because when we book Vistara ticket through the miles, only the value or the consideration for the flight ticket is taken care by the miles. And they ask you to pay some amount over and above that, which is the tax which they collect, and they discharge that tax liability. So it completely depends, Abhiram, on the transaction. Then I think
so there are some fresh questions at the top, if you would like to.
Okay. Yeah, I think there are some more questions. So Himanshu Batra, for GST taxability, can we net off the referral from the valuation for the purpose of discharging GST liability? For GST taxability, can we net off the referral from the valuation? We will have to keep the barter element in mind. Until the time the barter is not kicking in, it is okay. But otherwise, the tax becomes payable on the gross value. So we need to be very sure of the transactions. Yes, the recording of the session will be available on YouTube. So you could get that as well. Himanshu is also writing, is it correct to say that Ludo, pool are skill-based games? Yes, of course. Ludo is a skill-based game. Ludo is not a game of chance. Now, if you play Ludo, you need to know which move and which coin to move. If you move the wrong player, or you do not keep it on star, and so on and so forth, then you lose. So it's a game of skill. And in fact, there is a judicial precedence with respect to Ludo which says that it's a game of skill. So very much it's a game of skill. Don't worry, it will not go within the gamut of lottery and betting and gambling. There is question from Rajiv. The Honorable Supreme Court judgment dated this titled IMAI has held virtual currency to be a form of money. Yes, this was the decision I was talking about. This IMAI decision, the first writ petition with respect to Kali Digital was filed by me in Delhi High Court, and then everything got merged. Interesting reading. What you're writing is absolutely right. This decision must be seen in the interest of also how to protect this industry. So the ECG ruling, etc., are also interested. You have very, very well written it. The last part of it is the POS of the brokerage service rendered by the agent or broker shall be governed by the default rule, that is the location of the recipient of service shall be the point of supply of service. In view of the above, do you think that the case booked by DGGI against WazirX case has a legal standing? I do not want to comment specifically on the WazirX case because I am not privy of the WazirX facts, but let's understand. If the exchange is outside of India, the recipient is in India, we will have to determine the place of supply as per 13, because one of them is outside of India. If one of them is outside of India, the place of provision will be determined whether on the recipient based or on the provider based. Needs to be seen, because these are transactions, these are online transactions, and only the complete fact will determine whether the place of provision is in India or not. But if we see the intention of the government for these online services, they would want to tax these online services when the recipient is in India, because the taxation system is also based on the destination based consumption system. So without commenting on WazirX, I think we will have to see that where actually the ultimate recipient is situated in such instances, and the answer would completely depend only with respect to determining the point, the place of supply with respect to the place of the recipient. Gitish Bajaj is writing, FEMA compliance of cryptocurrency. Yes, FEMA compliance will have to be done. We are all waiting for detailed guidelines which will come and which will determine the way forward for the entire sector. Shankar Iyer is writing, since you spoke about extraterritorial jurisdiction for taxation, if cryptos are banned and operators operate from Cayman Island or any other place, could the government have an easier equalization levy kind of taxation? I think that's a very interesting question, because see, what happens is that Article 245 of the Indian Constitution provides that only merely because of extraterritorial operation a law cannot be banned. But it also provides at the same time that the parliament can impose or have a statute or law with respect to what is happening in India. Now, one is extraterritorial operation, and second is applicabilities of law on extraterritorial aspects. Can we have an extraterritorial law, or whether the law which we are making is having an extraterritorial operation? That will determine that what actually could the restriction be. So, for instance, if there is an advocate sitting in London, he has moved to London 10 years back, he is still an Indian citizen but operates, or he has a dual citizenship. He has his earning out of UK, he earns there, he has his bank account there, and out of that bank account, he buys cryptocurrencies out of India. Or he transfers his money from his old bank account from India as per the amount which is regulated, which is allowed. The amount goes back to that country, and then he buys cryptocurrencies out of that. So can there be Indian regulations to impose a ban on that? It will have to test the waters of constitutionality for sure. So I think the government understands that, and they want to be very clear in terms of what they would want to regulate and what sort of restrictions they would want to put. Madhvi is thanking for the session. What are the enforcement challenges to such wide definitions of cryptocurrencies? I think that's a fantastic question, Madhvi. There will be a lot of enforcement challenges. There will be a lot of constitutional challenges. If we see the way the cryptocurrencies have been defined, they would want to basically include each and everything within this cryptocurrency. They would, and the way they have defined other aspects also, including the penal provisions and the applicability under different sections, it has very, very wide coverage, whether these are for consideration or without consideration for tokens and so on and so forth. So I think it will have very wide applicability. It may have applicability even in those situations wherein the taxation arms could be extended to extraterritorial activities. And in those situations, there will be constitutional challenge for sure, Madhvi. Trading of cryptocurrency, today what I feel is that the trading margin must be taxed, not the entire value. So I hope that answers Himanshu. Is cryptocurrency legal in India? Today, the regulations are not there, frankly. The regulations which would come to ban or to regulate would only come from a particular date. So today, if you ask me, it is absolutely legal because there is nothing which bans it per se. So But if you have it, I think it is the right time to exit, because we do not know what the provisions will come after this bill is enacted. And if there is a period of 90 days which is prescribed within which you need to dispose of your crypto assets, then the $1 million question which will arise is that who would buy when there will be bulk sellers? So I think that is more or less what we have. I'm thankful to all of you for attending this on a Saturday evening. This presentation would be available on YouTube. You could follow me on YouTube. You could follow Taxmann on YouTube, and you can join me on my LinkedIn account if you have any further queries. Thanks for now. Be safe, stay healthy, and take care. Thank you.
Thank you, sir.
Thank you so much, sir. Okay, please, Kanika.
Thank you, sir, for simplifying so many difficult concepts. I would like to thank all the attendees for taking out time today to attend the session. And with that, I would like to end the session. Thank you all.
Thanks a lot, sir.